Welcome back to Wall Street Week. We are talking with Liz Ann Sonders and Morris Mark today. We can't talk about the economy and your investments without talking about this once-in-a-lifetime presidential election and how it will impact your money. Do you see an impact to stocks, to the markets, Morris, depending on who wins this election?
Yeah, I think so. Well, the way we look at it, and I'm trying to be simple in this analysis, we think the market is what it is, and if Hillary's to us is the conservative candidate. If Hillary were the next president, I think the environment we have is the environment we'll have. And
so you're talking about like 2% economic growth.
Exactly. Okay. The real question mark is the Republican candidate. He's got some really good ideas. He's got some other things he said which frighten people. And you just don't know whether he will implement the good ideas or not. I think, though, that for him to be elected, he's going to have to convince people that his good ideas will make sense and he'll implement them.
So it could be great, it could be horrible.
Exactly. And I think it's really important.
Well, do you think that's going to happen in the next several months? Is this going to become an issues-related campaign?
I'm not a political forecaster. I'm just saying, as an investor,
right,
what I'm interested in is, will we see growth initiatives from our government? I don't think we'll see it. I don't think anything will change if we're in one direction. But we need things like corporate tax reform. We have $2 trillion that's sitting offshore that's not doing anything either for us or for the world. And if we can resolve some of those questions without screwing up international relationships, I think the economy would explode.
Liz Ann, at Schwab, where individual investors are at the forefront, how important is the election in terms of what they've been doing and how they anticipate moving their investments around?
I don't think it's important yet in terms of what they're doing, but it's the majority of questions I'm getting now when I'm out on the road. So I think it's an uncertainty factor. A lot of the concern surrounds trade, given that regardless of who we get, there seems to be uniformity in terms of views on trade, which I think is, at least on the surface at this stage, a net negative for both the economy and the market. But ultimately, it's a function of we actually have to hear some actual policies in more detail from the Trump side. I think the concern is how far left does Bernie Sanders pull Hillary, and if, assuming she's the candidate, does she move more toward the center? The other thing that is unique is that this is an 8-year cycle here that we're in. People talk about the 4-year presidential cycle, the third year being the best. We bucked that last year, obviously. But there's also sometimes an 8-year cycle where you have a 2-term president, so that the election becomes an open election. And in the 8-year cycle, the only year historically that the market is down on average is year 8 because of that natural uncertainty. I would add that there's even more because of, let's just call it, the unique nature of this election.
Well, you know, you really haven't heard a lot of talk about tax reform from the Hillary camp. You do hear it from Donald Trump, although we're getting mixed messages in terms of what that might look like. But his corporate tax rate in his tax plan is 15%. So if the market starts figuring out or believing that we're going to have a corporate rate of 15%, you want to buy stocks with both hands?
You bet.
That's what I figured.
I think I look more at cyclicals. We have a cyclical play, which is housing. We think housing is getting better regardless, so that it makes sense here. But if that were to happen, I think housing starts would explode.
Big market move.
You know, Morris, I want to quote this perfectly. You said, if you don't do macro, macro will do you. And I think this is incredibly important. Because
I love that quote.
I want to speak to both of you about this because it's been so hard for individual investors, institutional investors, professional investors to not have a macro viewpoint. So how do you do it?
Well, you keep reading the newspaper and you recognize the fact that we're not running a macro fund. We're trying to find good businesses. And we just really want to make sure those businesses will be good in most reasonable environments. You look for key issues. You listen to people like Liz Ann Sonders, and you pay attention.
And so when a macro issue might impact a position in the portfolio, you have to then evaluate what possibly could happen, or you wait to see a change in the business model as a result?
I think both, Gary. I mean, you're always judging probabilities.
Right.
And since it's very hard to assess those kinds of probabilities, you just watch it really closely. But I think the first question you ask yourself today, is there systemic risk?
Right.
If there is no systemic risk, then you can stick with the business and wait and see what happens.
Yeah. Lizanne, macro to you is what?
Well, it's everything. As a top-down person, that's
Right.
what I spend all of my time doing. What's remarkable to me about this environment is the yawning gap between macro reality and macro perception. And I think we have such a strong muscle memory of not only the most recent financial crisis, but the fact that it came within a 10-year span of the prior crisis and two brutal plus 50% bear markets, that what we find with individual investors from a macro perspective is they either think we're still in a recession, or they feel that the world is going to come to an end next Tuesday at 3 o'clock. The focus on the negative, what's the next shoe to drop, what's the next crisis, what's the next black swan, is really remarkable to me. And I don't think the macro environment has been extraordinary, certainly from a global growth and the uncertainty related to central bank policy. But I think the reality is a bit better than what the perception is consistently.
I have to say it's been refreshing today to actually hear from people that are investing, making money in this environment, and doing it successfully. So thank you both. Morris Mark, and Sonders for joining us.
Before you go, the Fed. Is the Fed going to raise rates June 15th?
I don't think they're going to do it in June. I'm pretty sure they're going to do it in July. And as of now, I don't think that's a good thing.
Lizanne?
I think they will, and I think it may be a better thing than people believe from a confidence perspective.
Wow.
That's what they were saying in December, so we hope you're right for those that are along the market. All right. Thank you very much. Lizanne Sonders, Morris Mark for joining us. We'll be right back with more from Wall Street Week.